Imagine this. A midnight raid by U.S. forces captures a sitting president in his own capital, sparking global outrage, and within hours, Bitcoin explodes by nearly 8%, shattering the $92,000 barrier. Is this the tipping point where the U.S. dollar's iron grip on the world begins to slip, paving the way for Bitcoin to hit $150,000 by the end of 2026? If you're wondering how geopolitics could turbocharge crypto and reshape your portfolio, stick around. This is Dollar Endgame, and today we're dissecting the Venezuela fallout that's got markets on fire. Let's dive straight into the events that ignited this surge. On January 3, 2026, U.S. military forces executed a targeted operation in Caracas, Venezuela. According to reports from Reuters and the Associated Press, the mission involved precision airstrikes on key government sites, followed by a ground team that detained President Nicolás Maduro and his wife, Cilia Flores. They were swiftly transported to New York to face federal charges related to narcotics trafficking. President Donald Trump framed the operation as a critical move against what he called a narco regime, announcing that the U.S. would guide Venezuela towards stable elections. Venezuelan officials reported around 80 casualties, including civilians, amid the action. Interim President Delcy Rodriguez has since expressed openness to collaborating with the U.S. to restore order. The international ripple effects were immediate. China labeled the operation a breach of international law, with its foreign ministry stressing the importance of national sovereignty. Russia voiced similar criticisms, pointing to the dangers of unilateral interventions. The United Nations Security Council held an urgent meeting, though no binding actions emerged. Human rights experts, including UN High Commissioner Volker Turk, highlighted concerns over the operation's impact on fundamental principles of international law. Meanwhile, analysts from the Brookings Institution noted that this event underscores shifting U.S. priorities in Latin America, potentially diverting focus from other global hotspots. Venezuela's economic context adds layers to this story. For years, the country has navigated heavy U.S. sanctions, which have driven it toward alternative financial tools. Back in 2018, Venezuela launched the Petro, a state-sponsored cryptocurrency backed by oil reserves, as a workaround for restricted access to traditional banking systems. Data from CoinDesk reveals that Venezuelan authorities had been building Bitcoin holdings to facilitate international trade and evade sanctions. This backdrop made the operation a flashpoint for discussions on financial sovereignty. Nations watching from afar are now questioning their own vulnerabilities in a dollar-dominated world. Now, let's talk about the market reaction that's got everyone buzzing: Bitcoin's rapid ascent. By January 5, 2026, just days after the operation, Bitcoin crossed the $92,000 threshold, with peaks reaching around $94,000 before a slight pullback to above $92,000 as of January 6th, according to Yahoo Finance and CoinDesk data. Trading volumes surged, with Bloomberg reporting heightened activity from institutional investors and large-scale holders known as whales. Why the spike? Geopolitical instability often positions Bitcoin as a hedge, much like gold in turbulent times. Analysts from CNBC and Forbes point out that events like this amplify perceptions of Bitcoin as a decentralized safe haven, immune to government seizures or sanctions. Historical parallels reinforce this. During the onset of Russia's special military operation in Ukraine in 2022, Bitcoin initially dipped but then rebounded strongly as investors sought assets outside traditional fiat systems. Similarly, Venezuela's long-standing use of crypto under sanctions has made it a case study in de-dollarization, the global trend of reducing reliance on the US dollar.
An International Monetary Fund report indicates that dollar holdings in global reserves have dropped from 71% in 2000 to about 59% recently. The Venezuela operation could accelerate this shift, encouraging BRICS nations, Brazil, Russia, India, China, South Africa, and their expanding partners, to deepen alternatives like the Chinese Cross-Border Interbank Payment System, CIPS, or cryptocurrency integrations. Bitcoin's decentralized nature makes it a prime beneficiary. Unlike fiat currencies, it's not beholden to any single authority, offering a buffer against financial warfare tools like swift exclusions. CoinMarketCap data shows consistent rallies during past crises, and with Venezuela's crypto reserves now in flux, speculators are betting on broader adoption. Institutional players, including firms like BlackRock, have ramped up Bitcoin ETF inflows, further fueling the momentum. Some experts, such as those at Standard Chartered, have revised forecasts, predicting Bitcoin could reach $150,000 by the end of 2026, driven by regulatory tailwinds under the current U.S. administration and growing state-level interest in digital assets. But is $150,000 realistic? Let's break it down. Prediction markets, like those on Robinhood and Polymarket, give varying odds, around 21% for hitting $150,000 in 2026 per recent data. Optimists, including executives from Bitcoin Standard Treasury Company, cite factors like potential U.S. strategic Bitcoin reserves and increased mining efficiency. A report from Ark Invest suggests that if adoption rates mirror past cycles, combined with geopolitical pushes like Venezuela, we could see exponential growth. On the technical side, CryptoQuant's on-chain metrics show low selling pressure from miners and rising long-term holder accumulation, signaling bullish sentiment. However, bears warn of volatility. Standard Chartered recently halved their prior $300,000 forecast to $150,000, citing market corrections and regulatory hurdles. Zooming out, this ties into the dollar endgame framework, inspired by economic historians like Ray Dalio, who describe reserve currency cycles spanning roughly 80 years. The U.S. dollar, dominant since World War II, may be entering what some term Stage 5, a phase of internal debt burdens, inflation pressures, and external challenges from rising powers. The Venezuela operation exemplifies U.S. leverage through military and economic means, but it risks backfiring by pushing allies toward multipolar alternatives. For instance, China's Belt and Road investments in Latin America, including Venezuela, have already positioned the yuan as a contender. This event also prompts comparisons to other flashpoints. Analysts from Brookings observe that while Venezuela's operation was narcotics-focused, it could shape views on regions like the Taiwan Strait. China has ramped up military exercises near Taiwan, such as the late 2025 Justice Mission, emphasizing its reunification goals. Yet, lessons from Ukraine's ongoing situation, where sanctions have prolonged economic strain, might encourage restraint, favoring economic strategies over direct actions. In any case, such tensions could further boost demand for non-dollar assets like Bitcoin. For investors, the implications are clear. Diversification is key. In the short term, Bitcoin's rally might test $100,000 to $110,000 if tensions escalate, per forecasts from firms like BitBo. Gold has also climbed, up about 3% post-operation according to Kitco, reinforcing safe haven rotations. If you're building a portfolio in this era, consider assets resilient to fiat disruptions. But this isn't financial advice. Always research and consult experts. As the Venezuela fallout unfolds, It's evident this isn't just a blip, it's a potential accelerator for the dollar endgame. We'll keep analyzing how geopolitics intersects with markets, from BRICS dynamics to crypto regulations.
If this breakdown hooked you, smash that subscribe button, enable notifications, and like to boost the algorithm. Comment below. Do you see Bitcoin hitting $150,000 this year, or is the hype overblown? Your thoughts could shape our next video. Up next, exploring Taiwan scenarios post-Venezuela and their market ripple effects. Thanks for watching. Stay ahead in the endgame.